Good morning. My name is Austin Lawrence, and I am a senior loan officer with Pacific Wholesale Mortgage. And I wanted to introduce you to jumbo loans today. Jumbo loans are a little bit different of a product when it comes to home loans, and it's something that I just wanted to introduce as kind of a unique feature that we actually offer some clients that are in a position where they can't meet the conforming guidelines. So jumbo loans are a wonderful tool that we can use to help homeowners, especially in the markets that are outside of what the guidelines have dictated for Fannie and Freddie. So I wanted to start off with one of the most famous kind of pictures about relationships because I want to kind of talk about the metaphor of jumbo loans being like dating. As we all know, I'm going to speak from a guy's perspective. Dating is really a kind of a process of having an excuse for guys to get out of the house. And it is one of those things that we kind of look at idealistically, but in reality, as we get into it, we kind of find that it is a little bit more work than we would actually hope for. So I wanted to introduce jumbo loans as a parallel to that. So here I go. Jumbo loans are like dating. All right. So what is a jumbo loan? I wanted to kind of first start off by just giving you a brief introduction to the jumbo loan. And then I want to talk about jumbo loans versus high balance loans. And why is this important? Because it's a little bit confusing, especially for the layperson coming into it and not understanding just that basic concept of what is the difference between those two. So jumbo versus high balance. So let me just start off with a jumbo loan. Jumbo loans are what we would call non-QM loans, meaning that these loans don't fit what we fall into the category of qualified mortgages. And qualified mortgages are part of the conforming market, and they're backed by Fannie and Freddie Mac. So those guidelines will support them buying those particular loans on the secondary market, which is important because it actually allows the lender who's lending you the money to sell that mortgage to somebody else. Now, in the jumbo market, that's a lot different because a lot of the times these lenders have to portfolio those loans, or they have to hold them within their actual registry and make sure that they're servicing those particular loans. So the underwriting guidelines are a little bit more unique, and that's kind of where I wanted to get into this versus high balance. So jumbo loans versus high balance loans. Both mortgages offer loans for relatively high cost areas. But while a high balance loan is a conforming loan within the guidelines set by Fannie and Freddie, a jumbo loan is non-conforming. Conforming loan is typically easier for a lender to sell on that secondary market, as I was saying, so interest rates may be lower. Although in today's market, we're seeing that there is really a kind of a parallel between those two, probably about an eighth or a quarter higher than the average conforming loan guidelines. All right, so high balance loans are part of the conforming market. So we're outside of that whole market right now. And so that's why jumbo loans are a little bit unique and different. As we get into dating, it's kind of the same thing. We have this idealistic perspective of what dating is going to be like and how optimistic we're going to be about it. But come to find out, it's really a process of kind of finding out what you do like, don't like, what you're willing to tolerate, etc. So it is a process of learning which loan will fit your situation the best, because there are a lot of unique products. So what are you looking for, and what you're looking for matters. Jumbo loans are those from conforming limits up to 3 million. So let's use an example. Let's say in Solano County, that loan limit is 548. So they may give you conforming guidelines that go up a little bit higher than the 548, but usually once you pass about $1,000 past that 548, you're now into this unknown category because it doesn't fulfill the conforming guidelines for Fannie and Freddie. So that's where the jumbo market comes in, and it offers products and programs in that particular market. So let's say in Solano County, that would be 550 up to 2.5 million. Okay, so those jumbo loans between 750,000 and 1.3 million will be full of shopping and explaining if you are not prepared, and have great communication with your clients. Meaning the clients that are in that market are going to be a little bit confused and kind of out of their element. and they are going to be shopping you. So what you want to do is you want to pay attention to what their needs are and that particular product that they need to service whatever their situation is. Okay, so you can't be lazy with these clients. The loans from 1 million up to 3 million, yes, they are higher loan amounts, but those are specialized lending. Then these borrowers will most likely work with you and be a lot more tolerant of the constraints and overlays associated with jumbo loans, meaning they're going to be a little bit more tolerant because they have probably been in this market before, are familiar with a lot of the kind of constraints that go with the jumbo loan, and also because they usually have a CPA or they're working with people with their finances, they have some kind of a cross understanding of the actual terminology that you're using and stuff that really becomes relevant and important. So you better figure out what they like and enjoy, and what they don't like about the process is what they will not like about you. So like dating very much, they're going to associate their experience with you and that jumbo loan with what their home loan experience has been. So you want to try to match that up as best you can and find their unique likes, dislikes, and what their needs are in that program. Okay, so let's talk about some of the specifics, which is jumbo loan guidelines. Dating can help you develop an understanding of what you like and what you will tolerate. And that's kind of a similar approach that you want to take with jumbo loans. Is don't think there's only one jumbo loan, there's only one product, there's only one lender that can offer this service. You really want to kind of shop around to find which one services you the best. So there are a lot of choices out there. So you better know what you want in the jumbo loans. Be aware of all the changing figures when changing loan amounts and programs affect your actual outcome. So here's a good example. This is one of the set guidelines for, I pulled this directly from Rocket Mortgage this morning because they're just a major lender and most people know them. But they have an LTV, meaning they will take you up to 90% or 89.99. Most of the time, jumbo loans previous to this have been 20% down. And in fact, you usually see with investments, especially in the jumbo market, you have to actually be 30% down, 25% down. So this becomes really important, especially when you're looking at particular loans, because you may have 15, 20% to put down. And you want to look for a loan that has better rates and programs that go along with that LTV requirement than trying to go for an 89% when you really don't need it. And then there are credit variations that you want to be aware of. So as I was checking this morning, they updated their guidelines. So now they actually go to 680, whereas just yesterday, the guideline was 700 FICO score. And then usually assets, which is important, they usually want to see assets in a seasoned account or a reserve account of anywhere from 16 to 18 months, depending on the loan amount, the situation you're in, where you're located. So there are a lot of moving parts and factors that go into that. And these jumbo loans, much like when you're dating, are a process of you trying to figure out which one best services your needs, not in dating servicing your needs, but actually that you have the best copacetic relationship with, and that it's a compliment to you. So moving on past the guidelines, what I wanted to do was kind of bring out why brokers are an important aspect of the jumbo loan market. When you're dealing with bankers, like let's talk about some of the big ones, Chase, Bank of America, Wells Fargo, they have only particular products, limited amount of products that will allow you to get into that jumbo market. So what I always recommend is that you do talk to a broker, especially in this particular market. Like myself, I am a broker, because I can look at different lenders' programs and then match those up with you. So I always use the analogy of the Fiddler on the Roof, because in Fiddler on the Roof, they have the matchmaker, and the matchmaker actually sets you up with the perfect person so that when you get married, you have a long-term good relationship. So they're kind of the ideal person that says, yeah, this person and this person will work well together. And as brokers, we do that with your loan. We say, this is your situation, and this particular product would best service you. So we are the Fiddler on the Roof of dating. we will find you the right jumbo loan. Okay, so this is why brokers like myself are so helpful in the market. We're the connectors of the actual client to the right particular product or program. Matchmakers, find me a jumbo loan. So like the song goes, matchmaker, matchmaker, find me a match. We want to find you a jumbo loan. So we're not tied to certain banks and can even provide income qualification as a personalized service. So we can cater the program or the loan to the particular product that you're trying to get or use. We're not tied to any association or obligation. You can provide the client support and a personalized buying experience. And this is what all clients deserve. In fact, I'm starting to see more and more in this entire market that the best loan officers find out what the best product is for their client. You're not just offering them, here's what we have, but actually kind of doing some deep dive into what their actual situation is, what their needs are, obviously what their wants are, and then trying to cater your particular program or products to that. So I think those are the most successful loan officers because they've actually identified a need or an issue that can be solved within the product for the client. Okay. So that is pretty much it for my presentation. Just wanted to give you a general introduction into jumbo loans because they are a different type of product when it comes to home loans. And some people kind of just think they're the same. And so I wanted to give you kind of a context in which to understand it. Here's my contact information. I was so pleased and excited that you attended. So thank you so much for being here. I really, really appreciate it. If you're now watching, good morning, good afternoon, good evening. I really appreciate you taking the time to watch this. Here is my contact information. Please reach out. I really think of these as an initiation of a conversation that we'll have that you have a particular interest or need in. And if you're a loan officer dealing with this particular situation and you wanted to kind of just, chit chat about it, please give me a call. I'd love to, talk to you about your experience or, help you to become educated in this particular market.